So these are the abbreviations we will be using throughout this webinar, and some you will be familiar. Especially, I will just point this pointer on the areas which are focused. I need to focus. So you can focus on the last 5 terms which relate to the pricing, excise price. And so these are the terms which we will be using when we will be discussing the excise prices. Okay, now the contents. We will first discuss certain basic concepts, then we will move to the registration criteria, then there will be excise products, which we will be focusing at. Then there will be the excise activities and excise price rates and tax computation. Then we will be moving to the excise tax activity life cycle. Then we will be discussing the case examples, important considerations and consequences of non-compliance. So this is the overall webinar content we are doing. We will be demonstrating certain examples also. Okay, so firstly, the basic concepts. It will be a refresher for you to just review these because my focus won't be on them. It's only a refresher thing. So excise tax, basically, it's a regulatory tool which government uses to control certain hazards like health, environment, social or economic hazards. So for doing this, what they do, they just raise the prices of the goods which are allied to those hazards. So when the cost is more, the consumer is unable to afford, and in that way its demand is discouraged, and in a way the consumption is reduced. We can see certain examples like health hazards, for example, the cigarettes and smoking devices, sugar, alcohol, and similar things which are health of human beings. Also, the environmental hazards like fuel tax, eco tax are charged on fuel, and forestry and mining. Then there are economic hazards like there are certain luxurious items on which some regulatory duty is imposed. And finally, there are also some moral hazards for stopping. The government charges some duty, for example, on gambling. Consumer of excise goods who pay this tax. Can see that the value-added tax is only 5%, but even in European countries where the value-added tax is 20%, or so excise duty or excise tax is always higher than those taxes. So the rate is always on the higher side. Moreover, the tax is shown separately in case of value-added tax or other taxes, but in case of excise tax, the amount of excise tax is usually implicit in the final price, so it is not shown separately. The nature of excise tax is an entry-exit tax. You can differentiate it from the value-added tax, because in value-added tax is a transaction tax, and it is imposed on the sale transactions and purchase transactions taking place domestically. But as far as the excise tax is concerned, it only applies when some product emerges into the economy, domestic economy, or it is extinct, or it exits from the economy. Only then it applies. So in that way, it's quite different from value-added tax application. The computation, there are two methods for computing the excise tax. Ad valorem, which is applicable in UAE, whereas in certain economies, the specific per unit tax method is also applied, where there is tax applied on the quantity of the output or emission or some hazards. So in UAE, as far as UAE is concerned, it is on ad valorem basis. The scope of excise tax is also quite limited, specific compared to the value-added tax. However, its spread due to the international trading is quite vast, and that's why although it's a less discussed topic, but in a way it has a very pervasive effect on any country's economy, and same is the case with the UAE. Further, in pursuit of the basic concepts, we are just trying to interpret. This is a depiction of the tax activity cycle for excise tax, that how you move for the excise tax thing. We can start from extreme left and we will move starting this process to the right. So at the start, first we have to assess that on which person the excise tax is applicable. So there are certain points of applicability test. For example, do you conduct the excise activities? If you do, then definitely you will have to register for it. And you also can you have to check that excess stockpile assessment. It means that do you have an excess stockpile, which is another thing we will be subsequently discussing. Then whether there are the import transactions an importer is conducting, whether they are excessive to the specified frequency specified in the law, and likewise whether if someone is releasing frequency test for the release of the goods in the domestic economy's free circulation. So these four tests are undertaken to just assess whether a person means a natural or a legal person, maybe a business or company or different formats of companies. So whether a person is required to register for excise tax. If the answers of either of the test is yes, that either someone is conducting excise activities and he's a stockpiler in excess of the stock quantity, he's an importer who is frequently importing the products, or he is a releaser of the products who is releasing the goods more frequently, then he needs to apply for excise registration. On the contrary, maybe the answer to these questions are no. So in that case, there are exceptions or exemptions for the people who are not required to register. For example, there are people who don't deal in excise products straight away. They're out of the ambit of excise tax. Then there is less frequent imports or releases. Definitely, if like we do in value-added tax, if there is a threshold, likewise there is a limit for this excise tax that where one should register. If that limit is not fulfilling, definitely he won't need to be registered, and we will subsequently see that what are those limits. Likewise, if there is a non-excessive stockpiler, he is not reaching to the limit of the stockpile where he should be a tax registrant, he won't need to be registered with this. And finally, there is another special exemption that if someone is bringing some goods which are below the duty-free threshold specified in the custom law, and that is in the course of international voyage for non-business purpose, those goods will also be exempt, and that person will be exempt from registering. Okay, let's get back to the registration thing. And once you are eligible or you're required to get registered for excise tax, then you have to move and you have to check. There is on the FTA portal, there is a place where all the products which are registered excisable products are published. So you have to check that whether this your product which you are going to deal in is registered there or not. So this is the second thing which has to be ensured, that it is registered with the FTA, and if it is not registered, you first would be required after your registration that you register also your products which you are dealing in. So if you are importing something, you have to register it, or if you are a stockpiler or whatever, you have to register that product. After that comes the third step, which is the declaration of excise transaction. What happens, whatever transaction you are intending to do, before happening of that transaction, you have to somehow declare that transaction to the FTA, because FTA will verify the things which are being declared, and there will be a tax implication. So there will be approval from FTA, and after which you can just do your transaction. So once the approval of this excise declaration is done, for example, you are producing excise goods, you will file a producer declaration. If you're doing a kind of imports, you will have to file an excise declaration for imports or stockpilers declaration. So whatever declarations you have filed, it needs approval from FTA, and once it's approved, then definitely after that you can transact that thing. So once the approval is done, you will conduct the excise transaction, and once the excise transaction is done, in the month it is done, subsequent month you will have to file the excise return. So the sequence is that first you file the declaration in the same date or before that when the transaction had to take place, and after that you just transacted, and then you report that transact in the excise return. There will be two results: either there will be a due tax which will be you have to pay, there will be a liability for the excise tax you have to pay, or there will be a kind of excess of deductible excise tax over the due tax. So in that case, rather than paying anything, you will have to have a duty drawback or a kind of refund you will be claiming from FTA. In that case, FTA specifies that rather than directly applying for the refund, first you'll have to set off whatever liability, whatever refund is there. First you'll have to set off against the tax, whatever it is, and you'll have to carry it forward so that it should be depleted. But if still there is some residual, you have the option that you can apply in the end. So this is one way that you filed the return, you either paid the tax or you carry it forward and set off it against the due tax, and it was, if there was some residual, you just applied for the refund. The other thing is that you may have made some error for which you this thing voluntary disclosure you will have to file. It will be the same process like you do in the value-added tax reporting, that if some error is there, you will do this. And on the other side, if you have not, you failed to file the tax return in time and it took you some time to do, definitely you will be having some kind of penalty on your business. On the person, there will be a penalty for which he can pay, and subsequently he can apply for a fine waiver, because there would be if there is a legitimate reason. Otherwise, definitely that fine waiver request won't be entertained. Likewise, before we were on the previous slide, we were just discussing for the tax registrant, there is also warehouse keeper who is required to register. Now, there are some, generally I have just placed some questions which he has to ask. Are you doing stock keeping function? Do you manage storage of an excise good? Are you managing designated zone? So all these questions imply that a person, if these are yes, you have to register as a warehouse keeper. These are usually logistic companies or kind of storage companies which are storing goods for the people, for other businesses. But there may be instances where people are residing in the designated zone and they are doing this stock keeping for themselves, for which they also have to be applying for this warehouse keeper registration. But you cannot get registered as warehouse keeper until and unless you also apply for registration of the designated zone. Basically, its application form, it's divided into two parts. There are about 47 inputs you have to enter into that form, and numerous documents which you have to attach. But those two pages, one page is for registration of the warehouse keeper and the next page is for the registration of the designated zone. So once you file this form, then you have to specifying the security money. It will depend on the structure of your designated zone, the specifics, the throughput, average annual throughput, and the average annual stock. You would have given some inputs in your registration form. According to that, they will specify the security money, and also you'll have to pay the registration fee for registering the designated zone. So this is regarding the warehouse keeper's requirement or his criteria, why he is required to register for excise tax. Okay, this is the holistic view, you can consider it as an aerial view of the UAE economy, how it is divided. It would appear to you a complex diagram, but I just try to facilitate you. You will see certain colored areas and some arrows. Each area either specifies a jurisdiction or a territory, either of them. For example, this blue area is the GCC and the rest of the world, from where imports are coming and where the exports are going from UAE outside. After that, the biggest area I have just specified as customs department or customs jurisdiction. Everything, whatever is coming in, is coming first to this customs department, and then it touches to either to designated zone, which is specified in orange, or the excise department, which is white, and the mainland, which is a light pink color. So these 5 layers are represent the excise tax regime. The first is the GCC and rest of the world, the other countries outside GCC. The second is the gray, which is customs. Then there are 2 examples I have given in orange as designated zones. Then there is excise department, which is this white circle, and then there is mainland. Okay, these are the territories and jurisdictions. What about these arrows? Okay, these arrows imply many things. First of all, focus on this white circle, and whatever arrows are touching it, these are actually the activities of charge of an excise tax. For example, something is coming in the white, like I'm just in this stockpile, I'm just specifying this arrow. This is coming towards excise tax, means this stockpiler has some excess excise goods, and as a result, he is exposed to an excise tax charge and a payment, a due tax. So for that, I have just shown it by an arrow here. Likewise, sometimes there is a reduction in excise tax. For example, some goods are going, this thing, goods entering DZ, designated zone. What it shows, this arrow shows that some goods were in the mainland and they are going they're shifting in the designated zone. Why it happens sometimes for storage, sometimes for export, there are different objectives, but while they are getting transferred to the designated zone, there will be an excise tax implication because it's crossing this excise jurisdiction. Likewise, there are, okay, some arrows are just showing the movement and the uh, action of the excise tax. I mean, it's a payment or receipt, and sometimes it is showing, representing a reporting activity only, which doesn't imply any kind of payment or receipt of tax. For example, for local purchases, there is no implication of tax payment. If you domestically in the mainland you purchase excisable products, it at the face of it, initially it doesn't imply any kind of excise tax payment or receipt. But yes, you have to report every purchase. If you are a registered registrant for the excise tax, you have to show that to the report to the FTA that you have purchased that transaction, and it will, for every purchase there will be a separate purchase report which will be submitted. There is a form for local purchases which you'll have to submit excise registrant. Shipment. The goods are coming from rest of the world and they are lying in the customs suspension regime. They are not entering in the mainland or the designated area or the excise ambit. They are just going out from the custom suspension area. There are custom warehouses where only custom duty is implicated there, and there is no excise tax implication. But if it stays there, this transshipment thing, goods stay there for more than 90 days, their nature gets changed. They are considered as they have come inside the mainland. they are considered as imported, and then they are considered as re-exported when they are sent after 90 days. So a 90-day limit is there. So for although transshipment won't be exposed to the excise tax, but the re-exports will do, because in the custom suspension they have stayed for more than 90 days. Likewise, if something is exporting, it's also exposed to excise tax. It reduces the excise tax. On the other contrary, if something is importing, there is a rise in the excise tax, and that specifically shows that government is discouraging imports and encouraging exports, so that in the domestic economy the excise goods should be minimum. That is the purpose. And in a way, there is a byproduct of excise tax, that the government increases the revenue. Okay, there is also, like custom suspension, there is also excise suspension. What does it mean? That if the goods are exported from designated zone, or the goods are shifted from one designated zone to another, there will be whatever is the tax implication, like we do in the exports from mainland. Now they are happening from the designated zone, so the tax implication will be suspended. So you won't need to pay any tax on that in the shifting of inter designated zones, or shifting from, exporting from designated zone. Likewise, recently there is another implication of excise tax, is that the warehouse keeper has to report opening balances to the FTA. He will be responsible to get the audit of the individual stocks of all the persons underneath him whom he is supervising, and those registrants will have to confirm those opening balance quantities to the warehouse keeper. Both parties will be submitting the opening balance detail on the FTA portal. Warehouse keeper will first submit, and then the registrant will confirm it. So I think figuratively, this pictorial visualization gives you an idea of the ambit of excise tax, and how broad is this domain, although it's less discussed. And one thing to note is that between the designated zone and the mainland, there are two layers which always are there. One is the customs and the other is the excise. So whatever is moving in the designated zone from ML or vice versa, it will also be it will always be exposed to the excise tax. Okay, this scenario which we discussed, it gives rise to but definitely the coverage of some irrelevant topics like audit or kind of refunds, they will be beyond the scope of this webinar. Of the webinar, we can discuss it. To register or not register under excise tax, there are registrants, the persons who are dealing in the excise products and who are conducting excise activities. Involved in storage process in the designated zone, and they are responsible for reporting all the stock movements and their balances. Also have, there is a precondition that they also have to register their designated zone, relevant designated zone. And also there is a new thing which is under discussion these days, is the excise goods clearing agents or agencies or companies. There is a TINCO and TINCE, these two kind of strata given to the clearing agents. And what is this? This is regarding that as clearing agent is operating on behalf of an importer or maybe the exporter, he will have certain reporting requirements and certain suspension regimes. He will have to address the excise suspension because he's working on behalf of the tax registrant, and the original importer will have to pay whatever is there. So there will be a deferral mechanism which will come here. But we won't be discussing in this seminar this TINCE because of the limited scope. We can have another session for that. However, we will, to some extent, we will discuss the warehouse keeper, and our main focus will be the tax registrants. So these are the four kind of registrations under the excise tax regime so far. Yeah, there may be the excise products registrations, but that don't come at this level. Subsequently, we will be discussing it. That who should do. Generally, we discussed earlier, but now this is the whole detail: who has to register and who is not supposed to register. For example, like in value-added tax, there are thresholds of 375,000, 375,000 and 187,500 for mandatory and voluntary registration. Likewise, excise tax has certain thresholds, for example, but it's not in terms of revenue or sales or expenses. It's in terms of the frequency of the transactions. So, for example, the first person who should apply for the registration is the importer. If he's importing the goods quite frequently, what does this frequently means? It means that he is importing the goods more than once in 6 months, or he's importing the goods more than thrice in 24 months. I mean, in 2 years, if he is importing at least 4 times, or in 6 months he is importing at least 2 times, then he will be required. There is a mandate that he has to register for excise tax. Likewise, production of excise tax goods business, whoever is the producer who is producing the goods for excise goods business, he will have to register for the excise tax. Third, the businesses which are releasing goods from designated zone, again, it's the same rule that if they are releasing, if they are making releases more than once in 6 months, or they are making releases more than thrice in 24 months, then they will, it will be mandatory that they have to register. And lastly, if someone has, there were two specific dates. One date, this is 1st of October 2017, when the excise law was firstly promulgated, came into place. And the second date was 1st of December 2019, which was the date when this tax law was extended for some other sweetened products and liquids and this electronic cigarettes. So these two dates are quite important. Why? Because on these dates, the excise department had mandated that one has to check its physical stock on these dates, and if that physical stock somehow more than either of these two amounts, I mean 12 months average stock or twice of the monthly average sales of the last 12 months, if their physical stock was more than either of them, then they were mandated by the law that they have to register. Why this is important? You will say that, okay, there are people who are doing imports, who are doing production, who are releasing the goods from designated zone, but why to discuss this stockpile? It's because still there is non-compliance from certain dealers in the excise products who have still, because every day there is a payment penalty and filing penalty if they have not reported. So they have to address this issue still if they have not registered for this or they are not declared, because they will have to declare the stockpile declaration. So these are the four parties, and that's why I have just included this stockpile also, because it will be needed, but it related to the promulgation or for the law to come into force. Okay, besides these mandates for registration, there are some exemptions, and two exemptions can clearly be seen. One is that if the stockpiler is not reaching to either of these two quantities, I mean, if the stockpile is less than the physical stock on these dates was less than the 12 months average stock or the twice of the average monthly sales, then he would be exempt and he won't need to be registered. Likewise, a person who is on the international voyage and he is bringing some goods below the customs specified duty free amount and he's bringing it for non-commercial purpose, these three conditions are fulfilled, then he will be exempt from registering for the excise tax. Okay, that was the criteria for registrants. What is the criteria for the other three registrations? As I've told that TINCE we won't be, the clearing agents companies we won't be covering in this, but little bit touching will be done for this warehouse and designated zone. So for a warehouse keeper and a designated zone, first of all, a person who, what is the criteria? The criteria is the person who is carrying on designated zone operations, who is supervising it, he needs to do and warehouse keeper housekeeper won't be able to do it until and unless he registers the designated zone. Warehouse keeper can have be a logistic or a warehouse company, or he may be doing it for himself. So this is the criteria for warehouse keeper. He should be a logistic company by itself, managing for others, or its own stock it's keeping in the designated zone. So one can register for multiple designated zones. He can be registered as warehouse keeper or for a single designated zone, whatever the case may be. Okay, now let's focus on the excise products. We will discuss about the excise product categories, the list of the specific excise products, and the overlapping products. So excise products categories, there are 6 categories which have been specified as excise products. Out of these, the carbonated drinks, the energy drinks, and tobacco products were the old products which were introduced as excise goods in October 2017. Whereas the remaining 3, the sweetened products, the electronic smoking devices, and the liquid of electronic smoking devices, these were introduced in 2019, December 1st, when the law was extended for the products. So initially there were 3 products, 3 were subsequently introduced. And that's why I was focusing on the stockpile, because initially those 3 products stockpile was checked, and afterwards the extended products stockpile was checked on 1st of December 2019. Okay, I have just created lists of the each category, what are the items in each category. So for cigarettes, cigars, tobacco products, these are the products, and there is a schedule 24 of GCC common custom tariff which specifies these products. Law specifies this reference for this. Then there are sweetened products which say white sugar, soft white sugar, saccharin, and this aspartame, etc. These are the chemicals and sweeteners which are make them excisable products. However, there are these on your right side, there are the exclusions. You can see that if there are certain 4 kinds of beverages which are exempt from to be included in sweetened products, the beverages which have 75 or more percentage of milk or milk substitute, or there is a baby formula, special dietary beverage, or medicinal beverages. So these 4 are excluded from sweetened products. Okay, likewise, the remaining products, carbonated drinks, energy drinks, and liquid smoking devices. Carbonated drinks are the aerated drinks except the unflavored water and the concentrates, powder, gel, extracts which are transformed into aerated beverage. This is important because subsequently we will be discussing it. Then there are energy drinks which create stimulus in the human body. Those are also like caffeine or ginseng or guarana. These materials, the products are containing these materials, definitely they will be excisable. Likewise, liquid smoking devices like water pipe and cigarettes and the liquids used in the electronic smoke. So all these are the lists which we have just reviewed, just to skim through. Now, for the overlapping products, there is a law. A drink can be simultaneously carbonated and sweetened. In that case, it will be treated as carbonated drink and not as sweetened drink. A drink can be an energy and carbonated drink, in which case it will be preferably treated as energy drink and not as carbonated drink. And it may be simultaneously an energy drink and sweetened drink, in which case it will be treated as energy. So what is the rule of thumb? How we can remember this thing? See, you won't find anyone to be treated as sweetened drink. Either it will be carbonated or energy. And energy drink is twice. Why? Because it is 100% excise tax, whereas the carbonated drink is 50%. So only in this first category it will be treated as carbonated, and the rest it will be the energy drink. Then the excise transactions. Okay, let's move a little fast because we are getting out of time. Okay, the nature of the excise activity, the specific transactions, excise transactions, the stockpiling, and the concept of release and consumption. These are the topics for excise transactions. Ahead 4 slides we will be focusing on that. So first of all, what kind of transactions are there which are related to excise tax? First of all, there are transactions through which the excise goods emerge into the domestic economy, means mainland. In the mainland, there are some transactions which are happening through rest of the world or GCC, which give rise in the emergence of excise goods. For example, imports, production, or excess stockpile, these all are giving rise to the excisable products, and as a result, these give rise to the excise tax liability. On the contrary, there are products which are extincting or exiting the goods from the domestic economy, like exports and designated zone we are sending some goods from mainland to designated zone, so they will reduce the excise tax implication, the liability. And there are certain products which these two lower frames, these are the transactions which don't affect the excise tax. The products, for example, the destruction has happened in the designated zone before entering into the economy, and that has been reported timely and legitimate reason has been submitted, so it won't be counted as consumption and there won't be any charge of excise tax. And likewise, transshipments, because they don't even enter the after custom, they don't enter in the excise ambit, so they don't affect the excise tax. Likewise, local purchases, because before coming in the economy, FTA ensures that the tax has been paid. So on the local purchases, there won't be any tax, except that you have to report these local purchases. If you, as excise registrant, you have just purchased them. And disposals inside the economy all don't affect excise implication. Okay, so this is the specific list of the activities which are causing the tax, which are reducing the tax, and which are not affecting the tax. I just specified 3. Import to ML, for example, raise that. Exports will reduce, and consumption in the mainland, it won't affect. So when this slide will be shared, you can review the list. Okay, stockpiling. What is stockpiling? If a person is owning stock for business purpose, cannot demonstrate that the payment of excise tax has happened earlier, he will be a stockpiler. Okay, as I had specified, there were some old excise products and there were some new excise products. So physical stock of that excise goods would have been checked on these 2 dates, 1st of October and 1st December. So how to assess the stockpiler status? First, you count the physical stock on either of these applicable dates according to the product category. Once you have counted this physical stock, then you would compute two amounts. One was the 12 months average stock quantity in the past 12 months, and the average twice of the average 12 months sales. If so, we have computed 3 figures, A, B, C. So if A is higher than either of B or C, then you are a stockpiler, and you excess stockpiler, and you'll have to report the tax amount you have to pay. Okay, here one concept also is important as far as the excise tax transactions are concerned, that is release of consumption from production and release for consumption from designated zone. These are the tax points. For example, in the production, if they are you are just releasing the product for retail sale, it's ready for retail sale, or if it is fit for consumption, if it is not a retail sales product, or the excise tax good is a complementary good which is attached to another, linked to another good, so it will be determined at the point of sale. I mean, these are the points where the excise tax will applied, and it will, the excise declaration will have to be disclosed. On the other side, release of the for consumption from designated zone, there are numerous cases where something actually has not released released for consumption, but used within and consumed within designated zone, or goods are leaving designated zone, and there is a shortage which is not justified. So all these will be excise tax applicable. And only thing when you can save your excise tax is that you report within 30 days to FTA that this is the loss and this is the reason. So it may be relieved from tax. Okay, now the tax prices and the excise tax computation, etc. See, the process of excise tax computation is a four-step process. First, you determine the excise goods quantity. Compute the excise tax. So I have just sequentially developed the slides which are coming ahead. Determine the quantity, price, tax rate, and finally the tax amount. So now let's start. See, as far as the production, import, and release from designated zone quantities are quite straightforward. You know how many units you have produced, you know how many units you have imported, and you know that how many units are transferred from designated zone to mainland. So these are quite straightforward, and there is no long process to calculate those quantities. But as far as the stockpile is concerned, there is the intricate process, so I'm just elaborating this. For example, I just consider one sweetened product. I have assumed that on 1st December 19, there were 2,500 units. Okay. Now, this is one quantity. We have to compare three quantities. So this is the first quantity, the physical stock on this date. Now, there are two quantities we have to obtain: average 12 months average stock and twice of average monthly sales. What we did, month-wise, we counted all the average stock, or average stock is opening balance plus closing balance divided by 2. So the average stocks we took, and we took its average, so we arrived at 2389, which is one quantity. And the average sales, we take the monthly sales and we took its average, it was 1087. Now we have to see that this 2500 is more, or these either of these two figures is more. So we can just see that definitely 2500 is more than either of these, and the lower will be taken. I mean, the sales, average sales are lower than average stock, so we will deduct from the physical quantity the average sales, and the resulting units will be taxable. So we have determined the quantity. So as we were saying that there are 4 steps: quantity, price, rate, and amount of the tax. So quantity is determined like this in case of stockpile. For production, import, and releases from designated zone, the quantities are straightforward, that how many quantities, how many units have you produced, or you have released from designated zone, or you have done it through this imports, production, and release from designated zone. So those are straightforward. This is the computation you have to make. But mind you, there is an audit report for this which is required for FTA to accept this. Determination of the excise price. See, I have just given a model, a breakup, that what is the big context of computing the excise price. Ahead of it is a quite intricate process, but this is a component wise computation what we are doing. See, we purchase, for example, we are importing, this is the import case, so we are just importing a product whose free on board price is in USD per unit. I'm assuming this is free on board X works. I mean, it's on the outside the factory. From there, the importer will bring and take the responsibility. So this is the cost, then freight cost, insurance. So this is the CIF amount transformed into dirhams. So this is the total CIF. On this 5% duty will apply, custom duty. Then there will be other cost of administrative selling prices and profit margin. Adding them all, the importer will arrive at the retail sales price. This is the most important price for the computation of the excise tax. But this by itself is a mixture which we have to analyze. So you just keep in mind that we are just adding the components to arrive at retail sales price. After that, there is excise tax and VAT we just add. So arrive at the shelf price, which is on the corners of the shop you offer the products on. So this retail sales price, what is the implications of this? Retail sales, we have to determine excise price for computing the tax. So there were many terms which I just introduced in the INC acronyms, if you remember. This is the published retail sales price. What does it mean? That FT has published certain retail sales price on its portal, and this is designated retail sales price. This is a computation I will tell later. But if you have to arrive at excise price, you have to compare the two figures, that is published retail sales price, which is published at FTA portal, and the designated retail sales price minus tax, and either higher of those figures will be the declared excise price. Okay, now let's analyze these two components. Published retail sales price is clear, that whatever is published at the FTA portal. When you registered the product at FTA portal, this was the price which was published. With DRSP, in a designated retail sales price is the price higher of average retail sales price and recommended retail sales price. What are these two? Average retail sales price is simply the 12 months average. There is an intricate process, but for general understanding, it's a past 12 months average market price, which is ARSP, or average retail sales price. What is recommended retail sales price is when you import or you produce, you recommend a price of your product, you fix your price of your product. So the average past average price and the recommended price, higher of them will be accepted as DRSP, and after deducting the tax from DRSP, PRSP will be the you will get the excise price. Okay. Okay. Finally, the removal of tax is simple. If there is 50% tax rate applicable to the products, there will be a formula that DRSP should be divided by 3, then we will get the tax which have to be deducted from there. And in 100% tax formula, there are DRSP by 2, which will be applied in this formula. So we will get, there is an example. Simply, we have to arrive at this excise price, for which we just have assumed RRSP, ARSP, DRSP, and the PRSP, and we compare, and we finally arrive at this 150. Okay, determination of excise price, there are, for every product there are different. For example, some we have demonstrated, for example, concentrates, gels, extracts, etc., e-smoking device and sweetened products, energy drinks. E-cigarettes, for cigarettes there is 40 fils per cigarette minimum excise price, and liquid tobacco there is 10 per gram. So this is the part of, we have covered the quantities and excise price. Then comes the applicable weights. Carbonated and sweetened drinks 50%, and the rest 4 products are 100%, and maximum it can be raised by government till 200%, which is the maximum limit. Now this is the excise price computation method, that you assume the quantity we have discussed, excise price, tax rate, and due tax. So this will be the tax you have to pay. Now, what are the consequences, compliance, and important notes? See, there are two implications of non-compliance. There are administrative penalties which are given in the tax procedure law. It's the same as for applicable for the VAT. For tax evasion, there should be an intent to avoid the tax payment or receive unlawful refund. So it will be, then there will be penalties for this, and even arrest. So the important considerations you should do is the excise return cannot be filed unless there is a declaration submitted. Excise declaration should be submitted. So, and the approval before transaction is done, then ensure that your product is published on the FTA portal. Else it will be added to the portal. Ascertain excise tax implication well before time. And stockpile assessment is exchanges in the DZ must be reported within 30 days, otherwise it will be considered as deemed as released consumption. So here our webinar presentation ends, but I will just, because I get quick, so I just revise that first we determine quantity, price, excise tax rates, and the computation of tax price. So first we computed the stockpile quantity because it's complicated. The other three are easy, so I didn't take that example. Then we discussed that what are the, how we gross up the retail sales price, which by itself is a complicated computation we have to do, but you should understand this consolidation of the price, and then you can just do it for the subsequent analysis. So we compiled this, and then this is the determination of the excise price. Okay, what is the difference? There was retail sales price, whereas here there is excise price we are determining. Different kinds of retail sales price we are applying different rules, and we are at the end we are just arriving at the excise price, which is needed to be straight away multiplied with the tax rate. And these are the, these four we demonstrate for these four products. The same method which I have demonstrated for pricing is applicable. For concentrate in gels or extracts which are transformable into excisable carbonated drinks, it's simple: higher of designated retail sales price or published price, the price which FTA has published, or you have, the importer or producer's declared price will become the DRSP. There is no need for that intricate process which we have just demonstrated before. Yeah, there are two categories for these carbonate for drinks conversion. There are two methods which can be applicable. Whatever doesn't come under the first category, they will go in the second category. So there may be a simplified procedure for computation of excise price, or there may be a complicated procedure. And there are some specified minimum prices which are applied when we apply the excise tax. And finally, again, we ascertain the tax rates which are specified in the law, and we apply this formula to get the excise tax due. So that is it, and thanks for your presence. And this is perhaps a question and answer session. So it's over back to Mr. Let me just see the questions if something has been posted. Yeah, there are plenty of questions being posted. Yeah, Mr. Saeed is asking a question that what is the implication of local purchases and sales? I have specified already that local purchases are not give any implication to this excise tax. Only you have to report that you have reported, you have purchased something. For every transaction you have to do. Another question is that will excise tax be payable by travelers entering UAE? Again, I have specified that a traveler who is bringing goods below customs specified freehold duty-free threshold, and it is for non-commercial, there won't be any excise tax, but otherwise there may be implications for excise tax. Currently, okay, one guy is asking for the transshipment, that whether excise tax is applicable or not. Definitely excise tax won't be applicable for the transshipments because they don't come in the mainland, and they don't cross the jurisdiction of the excise FTA. It goes out from the custom. It's 90 days in the suspension. Dates are passed. See, if the dates, even the dates are passed, if you have not declared by law, the law doesn't relieve you to declare these products because they have come in the. So all you need to do is to get an assessment of the stockpile. If it will be excessive, only then you will have to pay. If it is not excessive, the audit report for the stockpile will be a safety for you, that because you are not in excess, so you are not supposed to pay any tax on that stockpile. So in my view, you should obtain that audit report, and whatever are the results, accordingly you should take action. Another question is that what if the excise goods are unsold for a period after being released for consumption? See, when the goods are released for consumption, that is the point when the excise tax applies and excise tax gets due and paid. After that, whatever happens to those that lot, it doesn't matter, and neither any excise tax refund will be there, whether you get audit of the perished goods or something. If it has entered in the economy and it is the excise tax has been paid, then even if you dispose of all the lot, it won't make any difference and you won't have any kind of excise refund or anything. Is the excise tax is applicable to wild and live seafood items? No. They at the moment it is only applicable on the sweetened drinks and the kind of carbonated drinks and cigarettes and smoking devices, etc. So let me see if there are more questions. An important question. Okay, there is another question that how to conduct frequency excess releases test. If you remember, I had told that you have to just check that whether you have released the excise products to mainland twice, at least twice in 6 months, then you will be exposed to, you will have to register for excise tax. Or you have to test that in, it is an expectation. It is not, the law says that you are expecting that within 6 months you will be importing one time or more. If more you expect, then you have to register. And you have to perhaps establish also that what were the basis of that expectation. And likewise, because there will be a business plan for your import or export activity or whatever, so you can demonstrate that frequently, but that they don't require those documents. FDA doesn't require that document from you initially. You should establish such a document for your safety and your correct analysis whether you're doing it more frequently or not. So it depends that and likewise, if in your expectation that in 24 months you will be importing more than 3 imports, or you will be releasing more than 3 times, then definitely you will have to register. If your business plan says that you don't have to import more than thrice in 2 years, then you will be safe, and you can authenticate that from some audit firm or something. It will be a safety tip for you, that if you get it audited, that this was our plan which we firmed up, and on the basis of that we decided that we don't have to register. So that kind of things you can do for just saving yourself from any kind of further queries on that. Shall we had these handouts in PDF form? I suppose it handout won't be available, but this presentation maybe would be submitted. Danish will inform after this question session that if that can be published or how it will be conveyed. Can you arrange an ESR webinar? Yes, definitely. We will just analyze the feedback on this webinar, how many people are interested and what, and ESR definitely we will be happy to do. And also we will be looking forward to have kind of another session of excise tax, because there are many topics which I have just left over due to the time constraints and the scope limitations. I was not able to go into further depth. Otherwise, there is a lot of things which have to be